Hello, everyone. Welcome to this week's weekly market view for Monday, the 11th of August, 2025 to Friday, the 15th of August, 2025. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis. Let's start off with the higher time frame chart. And let's mark some key levels on the monthly chart first. So nothing drastically has changed since the last week. As we can see, the monthly supply zone, which is still in play, is still playing out on the Nifty, and we are still within this monthly level of demand. So there is a fight between buyers and sellers going on at the moment right now. And let us see in the coming days or in the coming weeks if we do happen to get a little bit of a bounce out of this level. Now, what is interesting to see also on the weekly is that we are within this weekly level of demand. And we have 1, 2, 3, 4, 5, 6, nearly 6 consecutive weeks of selling. And now this is the week which has started slightly on a positive note. We still have a couple of hours to go for the market to close. And we also have, the remainder 3 days for this market, because 15th of August being a holiday, which means we only have 4 trading days for this week. So it'll be interesting to see how this weekly candle closes. And if the weekly candle closes positive or in a bullish way, then it's more likely that we might expect to see the temporary fall to the downside pause for a little bit. Let's move on to the daily chart. On the daily chart, we have been talking about this gap level since last week, and we are playing this gap level. So now we have a level which is the gap level as well as a level within the weekly demand zone. So ideally, price should pause, could move a little bit sideways, and then probably could take off. That's the sign that we are getting from today's move. But let's see whether this is sustainable in the long run. Let's move on to the next index, which is going to be Nifty Bank. So let's look at the key levels on Nifty Bank. Let's start off first with the monthly chart. So the monthly chart, we are still holding on to this rally-based rally level of demand. If we go on to the weekly chart, we are within this weekly level. But then on the daily, we have a more clear level. And seems like this level last week did test and created a temporary low for the market. Now, what is more interesting to understand is that if this level of demand does hold, then it's more likely that the Nifty and the Bank Nifty will probably move together. So it'll be interesting to see whether that happens for this week and whether the Nifty and the Bank Nifty take off from this level. So this is a key level to watch out for. In this particular scenario, it would be not ideal to be shorting a Bank Nifty. And hopefully we should be able to see a bounce coming from this level of demand on Bank Nifty. All right, let's move on to the India VIX now. And let us see what the India VIX is doing. So since this level of daily demand, 10.83 to 9.81, we have seen a slightly significant rise in the India VIX, which is the India VIX is basically inversely correlated to the Nifty. So if the India VIX rises, then the Nifty starts to fall. And if the India VIX starts to fall, then the Nifty starts to rise. So if you look at the daily candle today, we are seeing a little bit of a selling pressure on the India VIX, and that is probably forcing the Nifty and the Bank Nifty index to move up. There is a supply zone at 13.32 to 14.55. So it'll be very, very interesting to see if the India VIX eventually does get there. But if it does get there in the short term, then probably Nifty would also print its bottom. And then if the India VIX starts falling, and then Nifty is most likely to rise to the upside. In fact, all the indices are more likely to rise to the upside. So right now, India VIX is range bound between 13.32 to 14.55 levels. And on the demand side, 10.83 to 9.81 levels. Let's move on to the USD INR now. And if you look at the USD INR, let's start off first with the monthly chart on the USD INR. So if you look at the monthly chart, USD INR is printing an all-time high. If you look at the weekly chart, again, at the moment right now, we are facing a little bit of a resistance at this 87.90 level. So any break above this level will probably induce more buying. And if you look at the daily level, prices are just hovering here. So no clear sign. Demand is all the way down here, 86.90 to 86.68 levels. So price may consolidate, or price might just give a breakout from here on itself. If the price does retrace to this level of demand, we do, or we could see a potential bounce in the USDINR. Now let's focus on the key sectors for this week. So there are two sectors which are on the radar for this week. And let's start off with the FMCG sector. So the Nifty FMCG is now within a monthly level of demand. And after hitting the monthly level of demand, it has just been consolidating. We also have this monthly level of supply where it is currently, moving. And any move beyond this area, that is above supply or beyond demand, will probably dictate a new trend on the FMCG sector, at least on the monthly chart. If you look at the weekly chart, we have this area of supply from where the prices have given a strong reaction. And then we also had this area of demand, which is not yet tested, but most likely it may get tested. Prices have risen from this level. And right now we are simply consolidating. So there is no clear direction on the FMCG sector at the moment. But there are some interesting levels that are created on the stocks. So we'll talk about one specific stock today. This is Nestle India. And let's remove all the tools here. So let's start off with the monthly chart. So Nestle India right now is been trading well within this tested area of monthly. It's not a great area. So most likely it may break, and possibly we might move to the lower level of demand in the short to medium term. If we go to the weekly chart, we have this level of demand sitting right here. But what is very interesting to see is that within this weekly level and this area of very, very strong support, we do have a level on the daily chart, which is very, very interesting. All right. So this is the important level of demand. It will be interesting to see what does Nestle do once it triggers this level of demand. This is your rally-based rally, 1035 to 1009. So this is a key level of demand on Nestle. And the opposing supply is far away from current market price. Right? So that's sitting right here. So that's Nestle. Then the other sector, which is also in talks, is the Nifty IT sector. In fact, last week we did speak about this sector. So let's look at this sector with a slightly longer term time frame. So let's start off with the monthly chart. So on the monthly chart here, we have a level of supply on the monthly chart. Then we have this level of demand, which is in play at the moment right now. And prices are probably heading a little bit more to the downside right now. So there is a little bit of more bearish pressure on this sector than any bullish pressure. We also have this key area of supply. Some of the stocks have actually reacted from this level of supply, but on the sector chart, this area is still not tested yet. Okay. Now, as the prices are coming down, they are going to be coming down to key levels of demand. So we probably might see a little bit of a pause within this area. And once price gets here, it will be interesting to see that once the stocks come into this area, how are they going to possibly react? All right. So let's look at a stock with that perspective. So let's look at TCS. Let's open the TCS chart. And TCS chart has been in fact, has received a lot of beating. But what is key to look at is that, in fact, there are two levels of demand which are very, very interesting. You have this rally-based rally, 2753, 2509 level of demand. And then you have this second level of demand, which is sitting right below, 2358 to 2290. Now, these are monthly levels. So these are higher time frame levels. So they are very, very important and key levels of demand. And this is your closest level of supply from current market price, which is sitting at 3403 to 3732. Let's now look at some of the key commodity markets. So we will start off first with crude oil. So let's add crude oil here. And we will also add silver. And we'll also look at the gold chart. All right, so let's start off with crude oil first. So let's start off with the higher time frame analysis on crude oil. Let's start off first with the monthly chart. So here is the monthly chart of crude oil. Currently, crude oil is also reacting from a key level of supply, as we can clearly see here. It's more or less sideways to range bound, at least on the monthly chart. If you go to the weekly chart, a very, very interesting level within crude oil. So from the monthly perspective, we have this level of demand, rally-based rally, 54.40 to 51.46. So this is a key area of demand on crude oil. And in case if price comes here, then we may expect to see a bounce coming in on crude oil. If you go to the daily chart, the same level also looks pretty okay on the daily as well. So you can possibly mark this level as a level on top of level, drop base rally and rally base rally. So this is how the levels are looking like on crude oil. Key levels of demand, price does get here, we might expect to see a bounce in crude. The next commodity is going to be gold. So let's look at the gold chart. And then we'll have a look at silver. So here is the gold chart now. After making all-time highs, we are seeing a little bit of a move to the downside on gold. This is on the daily chart. So gold has rallied to the upside. If you look at the weekly chart, we have a level of demand sitting right here, which has also made a new high, which is this rally base rally. Will we get a pullback to this level? We don't know that because there could be some levels inside this area. So maybe if we go to smaller term time frames, maybe we might find something interesting on gold. But at the moment, right now, the weekly level looks very, very eminent and looks poised for gold to come over there. Okay, now as the price is breaking down, there will be new supply zones created. So there will be this new area of supply. So in case of price gets there, then price will again try to push down. But this is the area that I was talking about. So that you have this rally-based rally on gold. So key level of demand, 99,165 to 98,740. So if gold does start correcting, it might come into this area. And then from this area, we might expect to see a bounce in gold. Let's look at the last commodity. It's going to be silver. So let's quickly look at silver. So here is the silver chart, and we are now reacting nicely from a level of supply, but now we are also come into a key area of demand. 1,13,651 to 1,12,832 odd levels. We see a very, very strong bearish candle. Taking into consideration the overall location, most likely the price may fall a little bit further down. So let's go to the weekly chart. So on the weekly, just like gold, we have a key level of demand. And this looks probably a very, very strong level of demand on silver. 1,07,307 to 1,03,523. So this is possibly an area where fresh longs may be initiated. So it's a key level of demand on silver. All right, so this is it for the week. I hope you all enjoyed this week's analysis. And if you do like our channel, hit the subscription button and do submit your valuable comments. We appreciate your comments, and we do look forward to read your comments and probably come up with certain things in the upcoming session. So make sure you keep on watching this telecast every week. And if you do want to be a part of us, then you can contact your nearest branch and let know more about what Sharekhan Education has to offer in the form of any courses that you would like to learn. Thank you very much, everyone. Have a great week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.